man, so 2023 is officially up and running. But what has Bitcoin historically managed to achieve in January's? In this video, we're going to break down exactly how Bitcoin performs in January and what is the most likely scenario this year as well. We have to remember, I've been speaking a lot about the fact that Bitcoin is heading towards its first major recession, because the last one was in 2008. Now we're heading for a major recession with Bitcoin in quite a mature stage of its growth. How will it react? We've had a tough 2022. Let's leave that in the rearview mirror. And what can we expect going into this year? If you think it's just going to be blue skies, you're going to get a bit of a reality check. Go watch my video from yesterday to get a breakdown of what I'm expecting to happen. But also, I'm going to be dubbing this year the year of accumulation. I want to be focusing on accumulation, but more about that in a little bit. First and foremost, let's jump straight in the charts because I want to share this with you. Let's take a look at Bitcoin in January 2018. It fell 25%. Yes, 25% in January 2018. Let's take a look at January 2019. Bitcoin fell 7.3%. Let's fast forward to January 2020. Heading into this pandemic, Bitcoin ran 30% in January. 30%. No mean feat whatsoever. Let's move on to January 2021, well into the printing cycle of the central banks and their quantitative easing programs. Bitcoin ran another 14%, opening up at 28,000 and hitting a high in that month of 41,000. So for those of you who have just come into crypto and thought crypto is all about this sideways movement, boring movement, we've been sat here at 16,600 roughly for what feels like an age. Just remember, Bitcoin has made big moves, including this 4,000 swing here on crypto as well. So definitely keep an eye out on that. Let's then move forward up to January 2022, the most recent one. And obviously we fell a big 16%. So as you can see, there's a little bit of a mixed bag, but I've got another way of us visualizing this. Let's take a look at this breakdown. So on the left-hand side, you've got the years, and obviously this column is all for January. So let's take a look from 2011, where you have a 73% pump on Bitcoin in 1 month. 2012, 16%. 2013, 51%, 16% in 2014, 2015, 2016, both saw red years, obviously linking up with the 4-year cycles, 31% down and 14% down almost in 2016, a flat month in 2017 at 0.2% growth, a 25% reduction in 2018, and then we've covered off the most recent ones just in the charts. So looking at all of that, you're looking at an average return in January of 7.6%. And that pretty much sits in line with roughly what I'm expecting in January. I'm not expecting a crazy month. I'm expecting a little bit of a green month. And I don't want people to get that confused with, oh, we're off to the moon again, because frankly, I think Q1's going to be tough. But I wouldn't be surprised to see us eke out a little bit of a positive month. I don't expect it to go crazy, maybe a couple of percent here or there, but I'm just expecting still this teetering start to the year. And that is what I'm preparing for. And I think that's going to set the trend for Q1 and probably spill over into Q2. Remember, the focus is still this year going to be all around Jerome Powell and all the central bankers. That's still going to be the topic of debate. Are we going to get a loosening of monetary policy again? Are we, more importantly, going to continue to see rate hikes downwards, rate cuts, and then finally a pause? That is what we want to see. Just how we had 75 basis points rotating across into 50 basis points. Now, if we take a look at what they're expecting, let's see what the market is expecting. And you've got 92% of the market expecting just 25 basis points. In other words, 92% of the market are expecting that within 30 days from now, okay, so on February the 1st, we're going to see another rate cut, which brings you down to 25 basis point hike only, right? So we're really getting closer to the market's expecting to see a pause at some point in Q1, maybe Q2. So this is going to continue to be the debate going into the start of 2023. And this is what we need to monitor. Yes, the charts aren't looking fantastic. If you take a look at here on the daily chart, you can see here we've fallen out from this rising wedge. We came down, we've come down to this pivot point at around 16,200, and we're managing to hover above it. Am I expecting more pain? Potentially. I wouldn't be surprised to see this at some point want to test 15,500 again before we're able to go and start working our way back up. Remember, the catalyst will be the Feds deciding to pivot. That's going to be the main catalyst for Bitcoin to start its move upwards here, but there could be more pain. Either the Fed is going to stop increasing rates, or we're going to get plummeted in a recession. There's no other way about it, right? Either the Fed stops these crazy rate hikes and fixes the problem and starts printing again, i.e. loosening monetary policy, or we're heading into a painful recession and therefore the ongoing fallout that will occur from that. A quick checkup on the EMA ribbon, and again you can see we've got this extension here to the downside of our EMA ribbon. Again, don't be surprised to see it fall a little bit more down to 16,200 before we get somewhat of a relief rally back up to maybe the 16,800 to retest this EMA ribbon. So do not be surprised to see something like this. I mean, this wouldn't catch me off guard at all. Anything like that is more than plausible here to start off January. Let's also take a quick look at the Bollinger Band. You guys know I like the Bollinger Band as well. And you can see exactly as we expected. We got rejected from the middle of the Bollinger Band, and don't be surprised to see us come to the bottom of the Bollinger Band. That's exactly why there's so much confluence here. One, the EMA ribbon, which I just showed you. Two, you've got horizontal support there. And three, you've got the Bollinger Band, which gives me confidence when you've got a few different indicators showing you the same picture. That should give you confidence more so than just one indicator or one chart pattern. And again, if you're new to TA and you set yourself a resolution to learn TA in 2023, make it your year. If you're fed up of watching videos like this and not understanding what are they on about, what is Head and Shoulders, what is the EMA ribbon, what are Bollinger Bands, you're missing out on tools which will make your life in crypto easier. It's not going to make you a millionaire overnight, don't believe that. But it's a free course that's there, ijaz.uk/TA. Go and learn the fundamentals. This course could cost thousands, but it's free for you guys because I know a new crypto investor is born every single day and they don't know where to head to and they go start paying thousands of dollars for courses, right? So it's free. Use it, learn all these things, and that way these videos will start to make a little bit more sense, even just a little tiny bit. So that's our Bollinger Band. That's showing us that we could be seeing a little bit more pain to the downside. I do want to show you guys the dollar index. Again, for those who are new to crypto, the dollar index moves inversely correlated to crypto. We want to see the dollar index come down, and we have seen it come down, right? We had this huge period, if just remind everybody, of the dollar index roaring uncontrollably. And then we noticed this top. Right, and we monitored this throughout towards the back end of 2022. We noticed it in September starting to curl over, and we predicted it perfectly. We got the reversal of trend. If you look at the EMA ribbon, we broke it to the downside. But why was crypto unable to take advantage of it? Because of the crypto-specific issues around Sam Bankman-Fried and FTX. That is what kept the crypto price suppressed. I think without that, we'd be in the 25 to 30K region, moving horizontally in that region for now. The extra discount is because of crypto-specific issues. The rest is market-wide drawdown from all-time highs. Okay, but now this is good. The dollar index continues to show weakness. You're curling over again, a weak last 2 days here, heading into the holidays, which was good for the new year. And we just want to see it continue to work its way up. Even if it wants to have a relief rally, no problem. If you want to do this and then run back up to the EMA ribbon and then come back down, that is absolutely fine. What I'm more interested in is the weekly. I need to see this weekly get rejected. And we didn't quite get it the other week, okay? So this week is looking good now. We have got this coming down, and I just want to see this momentum move us to the downside. Why am I so caught up on this weekly EMA ribbon flip on the dollar index? Well, let me show you. If we historically go back, every time the dollar index flips to the downside, Bitcoin is able to move. Risk rotates on, more money goes into growth stocks, and more money goes into riskier assets, which falls into the category of Bitcoin and altcoins. So we do want to see dollar index move to the downside, have an extended move to the downside. Not just a daily chart move to the downside, which is what we've had for a while, but a nice long multiple weeks here, coming down at least towards its 200 exponential moving average at the 98 region on this dollar index. At least. That will then be nice for crypto and can mean we can start to have a bit more of a sustained rally. Do I think this necessarily could happen? There's a possibility, but I do want you guys to watch out for this. We could get caught out with a trap and dollar index could be bouncing. So if we start off January and COVID tensions in China continue to be an issue, if Ukraine war tensions continue to be an issue, if inflation numbers come out left and really mess us up, then this could cause us problems. The dollar index can start spiking again. The US 10-year Treasury, which is sitting just under 4, could start bouncing back up again like you're seeing it do here on its EMA ribbon. And that could signal risk off is starting to come back again, which could signal a difficult January for Bitcoin. So all to play for in January. Definitely will be monitoring the charts. This year for me is about accumulation. I've got my accumulation hat on. I'm sitting here and I'm looking at this, guys. And this is a really nice reflection point for you guys to look at. Shout out to whoever posted this. I found it on Twitter somewhere. But look at the Bitcoin price on New Year's Day over the last years, right? In 2014, Bitcoin started January at $767. And then the next year, you're sat at $313. The The year after that, you still don't recover. You're sat at $434. Up to the next New Year's Eve, now you're sat above your original. So this is the exact same thing that's going on here. Anybody who was buying in this range in 2014, buying at this 767 range, they would have had to sit 3 years to the next New Year's here. So bad New Year's in 2015, horrible year in 2016, and then they're up on their money. You've got to have a long time horizon on these things. Otherwise, you buy here in 2014, you sell here, you panic sell here, or you panic sell here, and you never get to see the bigger picture. Really important that you zoom out with your investing hat on and you're able to see the bigger picture. Let's play that out again, right? Look at this. You're buying at 14,000 in 2018. You feel like an absolute muppet the following New Year's Eve when it sat at 3,000. Painful, 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 right? The year after that in 2020, you're still nowhere near seeing your money. You're still 50% down on your money. But then in 2021, everything makes sense. In 2022, you think you're a genius. Everything is up, right? And then boom, you're back down again, 16,000. You've got to look at this over the long run. When you look at this over the long run, yes, it's a roller coaster ride, but the value is improving. It's getting better. The network's got an inbuilt scarcity model. The halvings are there to create scarcity for you. That does not exist in fiat, right? On top of the fact that it's not mutable, it's there for everybody to use. It never shuts down. You cannot silence the network, right? Nobody can hack the network. Since 2008, nobody's hacked this network. You cannot use it to manipulate your agenda. But at the same time, it's got this inbuilt inflationary effect, which makes the network more and more valuable over time, not less, like your paper fiat currency. So just a reminder for everybody here who's feeling a little bit despondent coming into the new year. Yes, we're going to have a rocky period. I don't necessarily think 2023 is going to be this massive standout year. If it is, fantastic. I've got my money in the market, but I'm focused on getting my streams of cash flow ready and making sure I'm able to continue to buy Bitcoin at these prices. Because one thing I know for sure, we're sitting at 26 on the Fear and Greed Index, and those days are going to come back when you go into the 40s and the 50s and then towards 100, where there is so much FOMO. Your Uber drivers talking about crypto. All your colleagues will not stop talking about crypto. Everybody, including their mother and their aunt and their dog, wants to buy crypto. And at that point, we're going to sit back and say, we were absolutely right. We'll trim a little bit of profit so we can spend and enjoy our lives, and we'll continue to invest and keep going for the next few cycles. Hope you guys enjoyed this video. If you're looking to get your income up whilst working in crypto and you're looking for different side hustles, go watch this video. I'll also link up another video so you guys can get prepared for a recession. If you've not seen a recession before and you're uncertain about the different ways that crypto could respond, this video is designed for you. Go watch it. Check out the TA course at ijaz.uk/TA. Thanks for watching, and I'll see you in the next one.